Hello and welcome to another episode of unComplex. I'm your host Adriaan van Berg. Today, unfortunately, Lionel is back home doing business in Switzerland, so I've got all the pleasure to myself with an incredible guest, Marek Dietl, the previous president of the Warsaw Stock Exchange, and of course the advisor of economic matters to the president of Poland. Marek, what an honor. Thank you so much for joining.
Thank you very much for having me here.
Marek, so it's been quite a dynamic, incredible journey that you've been on. Can you tell me a little bit more about your background?
I started really early on with working. So my first job I had was when I was 13. It was just the fall of communism in Poland, and there was a private entrepreneur in the cosmetic business. So I was putting the labels on the bottles. So first there was a production line, the shampoos were coming, and I was putting labels like for, let's say, very dry hair. Then the same shampoo for different type of hair. And suddenly we got another label. So it was shampoo for dogs. So that's how the capitalism started in Poland. So it was 1990. And fast forward, in recent years, I was indeed running the stock exchange. I'm economic advisor to the president. Before that, I spent 8 years in the venture capital industry. And in my early career days, I was leading the Warsaw office of international consulting company Simon Partners. I somehow grew up in this company. The first 10 years of my career were with this company. This is company focused on pricing. So the hottest topic in economy is currently tariffs, and tariffs and pricing are very closely linked.
Thank you so much for introducing the topic as well, because that's exactly what we've come here to talk about. Tariffs, the global trade war. Tell me a little bit more about this, Marek.
Well, you can discuss tariffs on the four levels, let's say, starting with the geopolitics and the quest for changing the world order. And we've seen that on many occasions during the history. So there was one superpower which was challenged by the other uprising power, and they swapped the slots. In the modern history, there was Dutch Empire, which conquered half of the world when it comes to trade at least in the 17th century. It even bet your Habsburg dynasty, you are very well aware of that. Your family was also involved in that fighting. But then they were fearing too much wars. They were widely spread across the globe. And after the Fourth Anglo-Dutch War, actually, United Kingdom took over. And then was United States taking over from United Kingdom, and now is China tries to challenge USA. And to simplify the things, usually the process was like this: that it started with a very ambitious country with very well-educated people, very high innovativeness, like in your favorite, I think, case, in the Dutch case. So there was plenty of innovation in navigation, in shipbuildings, and so on. And in this way, the people in the Netherlands become very productive. They also were innovative in, let's say, economic matters. They were very successful in setting up a proper stock exchange around 1607, 1612. They were able to float their East India Trading Company, which was actually private army, exploring company, and so on. And they were also able to defend themselves from one of the powerhouses of Europe against Habsburg, despite the fact that the country was relatively small. But they were borrowing money because they were issuing debt. The legal framework, the institution were strong enough that the people believe that they're going to repay the debt, so they can hire, for example, Czech or other soldiers and defend themselves. So capital market play also a very important role in the growth and development and rise of Dutch Empire. But sooner or later, and the trading started, so the Dutch currency, Gulier here.
Gilde.
Hitler, yeah, was become widely accepted because they were trading so much. So everyone want to save in this currency, and you get spoiled because you can print money and sell it to the foreigners for the goods. So you don't have to work hard anymore. So this classic Protestant virtues, like described by them Max Weber, go away simply because you live out of printing money, basically. So sooner or later you fail to the next challenger who is working hard, is very innovative, and so on. And we have a similar situation now with the United States. So the United States of America, they were competing with Britain with huge investment in the industrial investment, in the foreign trade. They were the industrial base actually allowed the US to effectively win 2 world wars, because it's not the Europe solved this problem by itself, but actually the United States solved it for us. They were supplying to the military kit to both UK army, French army under de Gaulle, and to the Soviet Union, because they were industrial powerhouse. Everyone wants to trade with US after the Second World War. There was a role of pound, of British pound. So everyone needed dollars. They wanted to save in dollars, despite the fact that actually United States of America defaulted twice on dollar. So they promised the world to exchange dollars to gold. And in 1933, Roosevelt said, well, we will cease that. It's a famous banking holiday, so the people cannot go to the banks and request the gold, because there were not enough gold deposits, because printing money is so sexy, especially for politicians. And the same was with Nixon, 1971, and he said, well, we'll not exchange anymore. Actually he devaluated effectively dollar against gold. And from 1971 it was constantly the amount of dollars available was constantly increasing. The economic order was based, to simplify the things, on United States promise the rest of the world that they're gonna consume their products, and the rest of the world promise will take your dollars in whatever quantity you're gonna print, of course in form of the money. The weakness of this model is that you print dollars, so what is easy, cheap. The marginal cost of printing money is close to zero, but you lose your industrial base and your military strength soon after, because you cannot fight the war with dollars. You need production lines, you need tanks, and so on. So that's one thing. The second thing, if it's exploited to the if it's fully exploited by the issuing country, then we arrive at the situation when the foreign entities own the debt of the superpower. The Chinese started to buy US-denominated bonds, or US government-issued bonds, when they were 40 times poorer than Americans. So rich Americans were actually selling debt to the poor Chinese at this time. It was, I refer to early 90s, yeah.
And is this then also what you would say like the funding of the trade deficit?
Yeah, and this is also, of course, trade deficit. That's the next thing. So the most productive nation is exporting the goods. So you close your factories at home. You issue dollars to pay for your consumption effectively, so people are happy, then they rich. Those people who are at the top of the social ladder, so richest get even more richer, because they can, pardon me, they can attract, they can make most out of the money of this printing money, and we see it, U.S. stock exchanges are dominating the capital markets landscape in Europe. Roughly 2/3 of all trading is done in the U.S., so everyone wants to buy financial instruments there. So the people there are getting richer. The poorer, those do not have the financial assets, do not benefit from printing money. It's even a risk of inflation and so on. So they benefit for relatively cheap products, but they do not benefit from the printing money and appreciation of financial assets, because they don't have. So you have more inequalities. What you see in US is happening. all the time. So there might be tension. So then when the people ask how it's possible that the Trump won, he just were addressing his message was rather for those who do not have. So they were left behind in this economic growth. And we arrive at the situation when someone realized, okay, we don't have industrial base. Our debt is owned by the challenger. The challenger, another way to finance the trade deficit is foreign direct investment. So the challenger starts to buy out our assets, our fixed assets. And we cannot compete anymore. So what we can do, we can either further the war, what was in the history, quite often, or you can try to solve it, for example, with tariffs. So you want to balance out this inequalities. You can either try to depreciate your currency, but it does not create the revenues for your for a government. So you cannot repay the debt with the weak dollar, for example. Or you can impose tariffs and get extra revenues and then get rid of this deficit. Because if you want to go to be net exporter, then so you want to export more than you import. So you want to improve your industrial base. What is the goal of Mr. Trump, President Trump? Then you have to export also your savings. You cannot import savings and export goods because you have to export the money so that people can pay for your goods. Yeah, that's the basic name of the game. So you cannot run deficit on the. You cannot have a surplus on the current account, so where you trade the goods, and have a deficit on the financial side because it won't balance. All in all, global net export is zero. Global financial flows are also zero. Some is borrowing, some is others are lending. Yeah, that's the we cannot lend from Mars. Maybe Musk will not solve that, but currently it's not possible. So this is this geopolitical level. There is also this macroeconomic level we touched upon. That is the question is if you impose tariffs and you further trade war, what's gonna happen to your what we already discussed, current account deficit, what's gonna happen to your inflation, how the interest rates gonna develop, and so on. That's the macroeconomic questions. But there's also, and this is widely discussed, so I don't want to touch on that. There are way better macroeconomists who comment it every day. But one thing is missing in the discussion, I believe, around these tariffs, trade war and so on, is the microeconomic approach. I'm also a professor of economics at the SGH, Warsaw School of Economics. So and I teach microeconomics. So I would like to share, if you don't mind, some insight from a very basic concept. So here you have supply and demand curves, and there's an equilibrium. The curve under the price but above the supply curve is the surplus of the exporter in the given country. So let's say China is exporting here, and the exporters in China are happy because they were ready to sell at the lower price, but they get them to the market price. So this is the surplus. When you look from the US, let's say, customers, so importers, they are happy that they were ready to pay for the product more, so higher price, but they pay only market price, so this is the surplus of the consumer. A very basic thing. And now, how the tariffs change this? This gets a little bit more complicated. So if you impose tariffs, for simplicity, we just add them to the price. Obviously, there are tariffs on the value of the goods. There are some minor issues. Of course, we could have done it differently, but the picture gets even less clear. So basically, what is happening? You add tariffs to the price. So supply curves move to the left, moves up. So the quantity demanded is lower because price gets higher, obviously. And we see that there is a new, very small field between the supply curve and the price, the old price, what is surplus of the exporter, because all the things above that is actually taken in form of the tariffs. It's taken by the government which imposed those tariffs. Okay, so those tariffs are actually decreasing also it's wiping out almost all the surplus from the exporter. It's also wiping out quite of the fraction of the surplus by the consumer in the US, where the consumers come from. But large, except of this triangle, what is so-called in English deadweight loss, so it's completely lost from this. But this rectangle actually are tax revenue, so when they are used to finance your budget deficit, or they're used for whatever, healthcare or whatever, are actually benefits of the country which is imported. So actually, as you see, indeed, the suppliers are losing a lot of their surplus. Consumers are also losing their surplus, but instead they recover part of that in form of the government revenues. And now we can also look at the situation when there is a different, because in the previous example we have 45 degrees, so they were symmetric, those curves. But let us look at the situation when the demand curve is very steep. Yeah, so changes in price do not affect that much the demand from the consumers. We see here is this, again, we have the surplus of the consumer and we have exporter surplus.
So what would be an example of this?
This can be, for example, in Switzerland. That's the good example. Switzerland, from 1971, when the exchange rate of dollar was freed from this coupling to gold, actually the dollar lost 94% of the value to the Swiss franc. In the same time, in real terms and even as a percent of GDP, exports from Switzerland to United States increased. So how it is possible? Because effectively, weaker dollar is equivalent of tariffs. So, but actually, Switzerland is exporting men's jewelry, known as wristwatches, the poison known as pharmaceuticals, and sophisticated machinery you cannot produce effectively if you don't have them. So basically, the sensitivity of consumers were not that great. So Switzerland was faring quite good despite of the unfavorable terms of trade, as the economists love to call it. So, it can happen. And why it happens? You see, again, it's moving. Of course, the tariffs are wiping out a lot of the surplus for the supplier. Again, the government is making more money, but it's also the consumers are losing quite a bit of their surplus. So all in all, but still we see with this field here that the supplier can survive despite the fact that tariff if the consumers are not that sensitive. We can also see that consumers are so average sensitive to the price changes, but we have a very flat supply curve. So actually the producer, from whatever cost perspective, whatever, are reacting very heavily on the price changes. And we see here that after introducing tariffs, there is negative surplus, so they do not make money anymore. So what is the bottom line from this simple sketches is that tariffs hurt very differently different industries, because every time you have to know how actually the supply and demand are playing together. So of course I fully admire my fellow macroeconomics expert, but they usually take this, let us assume that there's a kind of average market with this averages demand and supply, and actually this so-called first statistical moment average is not a very good description of the reality. Yeah. For example, when I walk my dog, we have on average 3 legs. Yeah, but none of us have a 3 legs. So basically, we should look, coming to your also reference to the capital markets, who is the winner, who is the loser on the industry level. That's why Mr. Trump, or what was also mentioned by his advisors, decided to lift the tariffs on some iPhones and so on, because apparently the surplus lost by so most probably the demand is quite steep for iPhones, and there was a quite heavy loss of consumer surplus if the prices were to increase. So every single industry might play out differently under these tariffs.
But Marek, it's also not just about the tariffs, is it? Because with Europe, I understand it's really about that they want to create more favorable trade deals.
Yeah, actually, there is a very smart method, value-added tax. So basically, when the goods arrive from the United States, in every country in Europe, there's additional tax on them. In Poland, it's 23% usually. There are some countries lower, but like in Germany, it's 19%. But effectively, those goods, imported goods, are more expensive, and also there are some tariffs. So there might be attempt to balance, but we should not forget that central banks in Europe are holding their currency reserves in dollars. So the deal was, you accept that we export you a lot of whatever, German cars or French jewelry, and we accept your dollars. But the problem is that in the last couple of years, also the banks started to accumulate their currency reserve in gold. So they were not playing fair to the United States under this deal. So United States witnessed there is less demand for US bonds, so effectively for dollars. So the deal, the terms of the deal are changing, but still the trade barriers stayed in Europe. So US finds it difficult to export to European Union.
So, Marek, is this the start of a proper protectionist era?
Well, I think there is a struggle for the world leadership, so we have to observe closely the US-China relation. It's better that they fear the trade war than the actual military war. So hopefully it won't convert into some of a kind invasion, a proxy war on Taiwan or something like this. So hopefully there will be only a trade war, and hopefully it will be kind of temporary and related to the industries where there is a clear conflict of interest. So, for example, U.S. wants to dominate wants to dominate maritime with its navy. So most probably US want to build up its capacities and capabilities when it comes to the shipbuilding. In the Second World War, 70% of the shipbuilding capabilities were in the US. Today is close to zero. Yeah.
So, and I'm also curious about Russia in all of this. So I've read that some people say that it could be a kind of a reverse Kissinger from the 70s with Nixon, that this all pans out to also help distance a little bit Russia from China, and that you already see this alternative route what China is building to not take trade through Russia anymore. Yeah,
that's basically a strategic goal of China, starting from China, is to differentiate the routes. Macaca Pass is a very narrow pass, and somehow Chinese were put away from the Pacific Ocean. What is perceived in China as the greatest mistake of the last emperors and the early communist ruling, that they do not conquer the better access to the Pacific. And there is also another route, the north route, because with the global warming, it might be possible to travel around in the sea route around Russia from north. So for sure, China has a strategic goal to have different routes. They still want to maintain this leadership in export, which actually they gained this position no more than 10 years ago. Before that, Germany was the exporter number one. So China China want to keep this position and benefit also geostrategically from this position. But Trump administration does not want to let it happen too easily. That's why I think there will be focus on this maritime and navy building and general maritime industry. Today is quite difficult to imagine decoupling from China and Russia, because China is offering the access to the financial markets effectively to Russians. They offer loan, that they are off-taker of their energy resources, was actually save their budgets. So decoupling might not be realistic in terms of economic, in economic terms. Of course, there can be a political deal against the rule against the rule of economics, but today it's hard to imagine from the business or economic perspective the decoupling Russia.
I assume it's not decoupling really, but more just giving other options to Russia.
It can be tricky.
I don't know. It feels like there's a lot of potential for US to try and build opportunities to cooperate more with Russia in the future as well now.
That's right, but I would not overestimate the role of Russia. Actually, Russia is still a relatively small economy for its size, and the vast majority of financial resources were already consumed in this war against Ukraine. So this invasion was terrible for the financial deposits and sovereign funds of Russia that were actually dried to finance the war. So what actually Russia can offer to the United States is not clear for me. And also, if the Russia would be led full scale to the, let's say, to the oil market, to the gas market, it will work against the US companies. Actually, they are benefiting from relatively high prices because the marginal cost is relatively high. This shale gas production is relatively expensive. So for those, and US is a larger energy source producer at the moment. So actually, the US business is benefiting from the fact that Russia is sanctioned. The same, by the way, for the Iran. Iran is also is put away from this energy market. What again is a benefit for many US companies.
And how would you suggest smaller economies like Poland, maybe even South Africa, should approach this time?
Actually, South Africa is a very interesting case because under Biden administration, there was a very nice treatment of African countries when it came. There was a kind of free trade agreement with Africa, and actually 50% of export from Africa to United States under this favorable treatment was from South Africa. Actually, so it's not a small country. Yes. It's a regionally big player and great beneficiary, by the way, of the free trade and open markets, and also as you know better than me that this coalition government and so on. So I'm not sure if short-term South Africa can do much about this.
They are scrambling in South Africa because AGOA is to become, in September this year, they will reconsider renewing AGOA's, well, specifically South Africa's position in this. So the markets are nervous.
Yeah, exactly. So I think it's very unfavorable coincidence that when the things were started to go okay, there's a completely 180 degrees turnaround. So it's very difficult. I'm not an expert of South Africa.
What will be the approach in Poland, seeing as you are the economic advisor to the Polish president?
Yeah, so actually for Poland it's an interesting situation. We are not a large exporter directly to the US. We, of course, are manufacturing hub for German and other Western European companies. So they manufacture in Poland and put a label made in Germany or in France, and they send it to US. So indirectly we are hurt, but not that strongly. We are And we are also with a very favorable situation when it comes to relation with the United States, because we spent a lot of on defense. We spent a lot of U.S. defense kit, so that is generally appreciated.
But also manufacturing even, isn't it?
Yeah, and we have to do some manufacturing. We have this huge nuclear power plant project with the United States. So taking, and we also, Polish diaspora to large extent voted for Trump. It's for the first time there was, usually the Polish diaspora was leaning towards Democrats, but this time they were more Republican. So actually Poland is not that bad position to negotiate, but we don't have too much freedom to negotiate, because for the trade policy, the trade policy is defined by the European Commission, but the Poland should be very active in this field, and maybe Poland even could play a role as a broker between European Union and Trump administration, US.
But it's interesting to see like Italy going directly to Trump to negotiate.
Yeah,
which is quite an interesting turn of events for EU-US relations.
That's absolutely the assertiveness of Italy and Ms. Prime Minister Meloni should be really admired by the other European leaders. She had very good, apparently she has very good links to Trump, and she wants to try directly. And Poland is not worst positioned to discuss. We have really historically and currently very close ties with the US. And basically we have, all in all, not criticized the US. Some people correctly spotted that US was fighting 13 completely pointless wars in the last 3 decades. And Poland was even in the coalition in the first and the second Iraq war and so on. Polish troops were in Afghanistan, so basically we are not very bad position. The question is if our current politician and European Commission can take advantage of Poland and their relation with the US.
Marek, now looking forward, short term, who will be the biggest winners? Who will be the losers? And long term, what do you think?
Basically, I think short term we should get ready for recession in the US. There will be a pain if the tariffs will be imposed on whatever level in 90 days. Also, this trade war with China will hurt the US consumer and will contribute to the inflationary pressure. Also, the inflation expectation in the US are approaching 7%, so the people expect the inflation, and this usually self-fulfilling prophecy with the inflation. So we can have stagflation, so no growth and inflation, which is not a good information, because basically US is the greatest consumer in the world. So that's the short term. Long term, I can hardly imagine that we continue the past imbalances in the economy. Under Reagan administration, there was a special action with the Japan and European leaders in the 80s to devaluate dollar, because there was $100 billion deficit. Now it's 1.2 trillion. So, I mean, you cannot it's not completely unsustainable. So something has to happen. I don't know if this radical move with tariffs was okay, but we have to look at the calendar. Trump has to be very quick on his feet, because there will be another election in the US in a year and year and a half, and it might happen that Republicans might lose one of the chamber or both chambers of the Congress, of the Parliament, US Parliament. So it won't be a good news for Mr. President, especially. There might be attempts to impeach Mr. Trump, so he wants to keep the control of Senate, especially. It's important for him. So he's acting very quickly, and the basic basic rules are that if you want to do a painful reform, do it within the first 100 days of your presidency, of your ruling, because then you can hope that benefits of your reform will come at the time of the election, the next election. But I'm a little bit skeptical of the resistance of the US economy for this trade war. What is not as mentioned, not a good thing for Europe and for Poland and for South Africa, every trade partners. And it's very interesting how it's gonna play out with the exchange rates. Euro is relatively getting strong, what is not helping to rebound the growth in European Union, obviously. And further lowering of interest rates might be difficult in Europe because they are already relatively low. Poland wants also lower the interest rate, so there might be some space in Poland. There's more space in Poland than in the rest of Europe. And if you cannot get your business cycle right with lowering interest rates, the other method is printing money. So quantitative easing, but already the balance sheets of the central bank, of the European Central Bank, is enormously big. So, and countries are indebted, and I don't know if the European economies can afford to have another stimuli package for the US recession.
Marek, now, this is not the main topic of this discussion, but of course it's definitely influenced as well. Would you mind sharing just a quick 1-minute take on what you think will happen in Ukraine, Iran, Taiwan, because of all of this that is happening right now?
Well, those things are interrelated, obviously. So it seems that the peace in Ukraine is further away than some people expected. Russia wants to fare a massive offensive. From the economic perspective, this is what I can comment, is most probably it will consume the last available resources for the Kremlin government. With the crude oil and gas oil prices going down, it could be very difficult to balance or to control the deficit. So even the Ms. Nabylova, the head of the Russian Central Bank, she publicly stated that the only way to combat inflation is deep recession. So the question is if the European leaders can get together and equip Ukraine to defend against the expected Russian spring offensive. And the second element you mentioned, Iran, but it's also related to the Israel. Israel is still fighting the war against the Hamas. That's a very serious humanitarian issues in Gaza Strip. So Israel, some preliminary negotiations started between Iran and US on the new nuclear deal between US and Iran, but Israel is advocating for complete closure of this nuclear program by Iran. What currently is hard to imagine. Iran made a great progress over the last couple of years, and they will never, but it's hard to imagine that they give up the program when they are so close to get...
not without force.
Yeah, exactly, not without force. So it's a very... and also there's... actually China is completely not interested or is not very much interested in peace in Ukraine. And is not very much interested that weakening of Iran, further weakening of Iran. So very tricky situation.
Marek, but now last week we also saw a bizarre situation in Poland with the Warsaw Stock Exchange being suspended for trading.
Yeah, that's the first.
Has this ever happened? You saw this. You saw the Warsaw Stock Exchange going through COVID, through the war in Ukraine breaking out. Were you ever close to this point? What happened? Can you tell me more?
Yeah, so basically, some of our listeners might be not aware that the first exchange in Warsaw was created in 1817, so the same year as the New York Stock Exchange. So and there was this was a very vibrant place. Actually, largest stock exchange of the Romanov Empire. Kingdom of Poland was part of Romanov Empire this time, so I think Russia, but the largest exchange was in Warsaw. And the exchange was closed when there was uprisings. Poland started where every generation of Poles were fighting for independence, so then it was closed. And then the exchange was closed when there was the First World War. And the Second World War, the first civil building which was destroyed by the Germans was actually the headquarters of the Warsaw Exchange. By the way, not far away from here, Królewska Street, 12, never rebuilt it. So you see how the exchange was important.
Because these were physical people that had to see to the transactions.
Yeah, this is outcry brokers coming into the exchange, what we know from the movies and so on. But in the modern history, the Warsaw Stock Exchange was recreated after the fall of communism in 1991, and the trade was never suspended. Never. So it happened for the first time. So we were, as a capital markets community, were shocked by that. As you mentioned, COVID, there was no suspension of trading, despite the fact that there was a huge pressure on me. The same when there was Russian aggression on Ukraine, we have not suspended trade. Because the idea of exchange is that the optimists and pessimists are meeting together and they do a trade. Those who are optimists, they buy. Those who are pessimists are selling. And the stock exchange's infrastructure should allow. It's like you don't close the doors because you don't close the roads when there is a spike in fuel prices. Simply those who need to go still go on the road. Yeah. So it was, but it seems from the statements, public statements, that there was simply the trading system was running out of capacity. And we were perfectly aware of that. In 2018, we decided to build our own proprietary trading system. Current trading system was supplied by the French, by Euronext. It's a hegemon in this exchange space in Europe with 7 countries being part of this kingdom of Euronext. And the system is not up to the standard, that's for sure. Actually, it was discontinued, so it's been not upgraded for a long time, and also the support and maintenance is very limited for this system. And actually this new trading system, proprietary trading system, which was the fastest trading system according to independent tests on planet. So it was twice as fast as the new generation NASDAQ system, for example. NASDAQ is the US. Yeah, so it was absolutely masterpiece, technological masterpiece what we developed. And also with the same hardware, it could run 5 times more orders per second than existing.
Can you give some numbers if you're talking about
20,000 orders for this system per second, and the new system with the same hardware is 100,000 orders. So it will be more than enough to for even very busy day. But the issue was that the system was developed in the agile methodology. So you develop it, but not that you have first documentation and then gradually you build the features and so on. But you build the features, you test them, and it's good. You continue, not you skip that with some sprints and so on. And to our surprise, some of our local clients, local brokers, were not eager to test the system. So there are some tech companies, there were international clients testing the system, but not the local ones. Because they said, we'll start testing when it's 100% is ready. What is, of course, against the rules of Agile, because we said 80% is ready and the details of the features should be discussed with the client. So you have to test, give us feedback, we can improve that and that. So it was very strange, and it actually resulted in a delay of the project for 1 year. And the second issue, there was change of leadership, and the this project was put on the question for half a year. There was auditing if it's right and not, if we paid too much to the architects or not, whatever. So it was auditing. So it also cost some time because people were not eager to develop if they knew that it might be discontinued. Yeah. So basically now, and then we reached to the point when the system is not capable of handling so much orders. So actually it's a reputation is at stake of the exchange because it was closed, so could not deal. And also there's foregone revenues because you can exchanges earn money by organizing the trade. If there are no trades, then you don't have revenues. Yeah? So it's a very unfortunate situation. and hopefully the new system gonna be implemented smoothly, and something like this will never ever happen again.
But on a personal note, this must have been quite hurtful to you to see this happen.
Yeah, that was not a pleasant, especially that people were calling me from literally all around the world. What happened? Something wrong, Some people in the West thought that maybe there was a bombardment because Ukraine, Poland, it's not that far away from here. So you receive the calls from your clients, and they are really scared what happened to you guys. So that was on a personal note, as you mentioned, it was not very pleasant. But I keep the finger crossed for the new system. It's, as I mentioned, technical masterpiece. It has great features. It can also test new features automatically, so you can add new things. There's a brilliant technology, and there will be new world opened for the Warsaw Stock Exchange with the new trading system. And hopefully, there will be other clients also using this system because it's absolutely world-class solution.
Marek, now you're talking about the transition of leadership. Can you tell me a little bit more how you've dealt with the transition yourself? Political change.
That was a political change. All the board members in the state-controlled companies were, or state-influenced companies were changed. I'm rather surprised that I was the second longest-serving CEO of the Warsaw Stock Exchange. So
it was 7 years,
right?
Yeah,
7 years, and I was on the supervisory board before. So that was an amazing experience. It was longer than whoever might have considered that. I wish we could work together more with my successor, but unfortunately, there was no willingness to work hand by hand in the transition period. But nevertheless, the team is there. I have great memories. Some projects were cancelled. Some projects are continued. The most important project is trading systems continued, which is great. Project I would not cancel is this crowdfunding thing, because I believe we need more IPOs, and basically IPOs, the first stage of IPO going to the public is crowdfunding, so I would keep that, but that was cancelled. There was a pre-IPO venture fund, which was cancelled, what was, I think, not a good idea, because there are plenty of companies which are not mature enough to go to the stock exchange, but if you give them pre-IPO financing, they might get ready for IPO, but that's fine details. Some people prefer that, some people prefer the other thing. The only issue, what might be strange for non-Polish listeners, we have an institution in Polish law, which is called absolutorium. So simply the assembly of shareholders give you kind of the clearing at the annual meeting, and I have not received that, what effectively prohibits me from running any financial institution in the European Union, what limited my next career opportunities, and some job offer I had to turn down, unfortunately, because of this. But I was not accused of anything, so I don't know why I have not received this clearing. So I have to go through a 5 to 7 year court case, and hopefully sooner than later I will receive a court order that I should be cleared. But in the moment I return to my roots, so I work with 3 companies as a consultant, and I sit on a supervisory board of 4 companies. So that's basically what I can do. I wish I could manage another financial institution, but I need to go through court to restore my credibility in the market.
Marek, I'm sure that justice will be seen, and you will be able to continue taking the financial sector to new heights.
I was the youngest CEO of Warsaw Stock Exchange in the history, so there's still many years ahead of me. So I'm not worried. The good times gonna come back.
I'm sure. Marek, as we close, maybe you can give some words of advice to political and business leaders in the world in this uncertain time.
Well, do not overreact to the situation, because we are flooded by the information, and the news run is negative. But do the proper analysis, look what really matters for your business and what is just white noise around the decision. And also there's a German saying that the quality always pushes through. So if you are working hard and producing great products or superior services, delivering superior services, you will be fine under this or the other tariffs. Your clients might be hurt more than you. So set on the productivity and on quality, and you will be doing fine.
Marek, thank you so much. And that's the end of this episode.
Thank you very much.
So
It's lovely.
please like and subscribe. Looking forward to bringing you another episode. That's it. Bye-bye.
Thank you. Bye.